Well, guys, the national debt is at $31 trillion, and that's $93,000 per person in the United States. So even if you're 6 months old, your work has been pledged to pay this back debt. And it with the interest rates higher, this is probably going to become more and more of a concern. I wouldn't be surprised if we have more of these kind of government shutdowns and various things where they're arguing about the budget. And see that coming on the horizon here coming up. Now, as far as what's kind of going on in the overall economy, obviously we have aggressive price cuts on a lot of properties in various different cities, whether it be Phoenix, whether it be cities in California. And sellers are getting kind of desperate because obviously with the interest rates high and everything going on, if they have to sell, they're having to slash prices, by sometimes 20, 25% where they had it originally listed. So, and I've seen this, Tucson, Phoenix, places like Sacramento. LA honestly hasn't fallen as much as you would think. More some of the outskirts and stuff like that has, but it's kind of odd that some of the prices in some of the cities have somewhat held up a little bit better than you would think. And I mentioned it previously that some of the rental rates, like in Boise, Idaho, there was aggressive price slashing, but uh, it was kind of odd that some of the rental rates didn't really seem that far out of whack. I mean, I'm not saying that they were like a great deal, but it wasn't like, oh, this is just ridiculous. Um, but that real estate market is crashing from like a sales perspective. But maybe it's just like some of these investors bought the home, they want to stick with it, and they want to get somebody locked into a year or 2 year contract with the rental. So I don't know. We'll see kind of what happens with that, but we already can pretty much predict what's going to happen. It's just money's going to get tighter and tighter and tighter for people, and the sales volumes went down. People just aren't making a leap because they sense that something's wrong in the real estate market, and then it'll just quickly kind of fall off a cliff when you don't get those comps coming in. And we're not going to really see kind of exactly kind of like where it's kind of like falling for another 6 to 8 months. Now, as far as crypto prices are concerned, you see kind of a similar type thing. Like as the bear market kind of lingers on, you'll see the volumes will just sort of drop over time of a lot of projects, and then it just gets to where the volumes drop so low that they'll start getting delisted from various different exchanges, and people lose faith in it. People feel like they have to sell out because prices are out of control just in the general economy, where it be food prices or fuel prices. Out here in California, the average in California is like $6.42, which is just a couple cents lower than the all-time high that it was hitting back in June. And it's crazy to see the gas prices because back when I was here in June, it was like, this is out of control. And I remember taking a picture of that. Now I'm looking at the gas prices, and they're higher now in some of these places than the picture that I took back in June, thinking, oh man, this is insane. So you got, there's several stations that are to where like regular unleaded is over $7 a gallon, and then premium is, 740, 750 kind of thing. I haven't paid that much, but I'm just saying some of the more expensive Chevron stations, some of these more expensive stations, you're seeing that. Um, so just a really, really, really bad situation, and you're seeing all types of inflation in Europe. I was seeing a thing that in the Netherlands, they're hitting all-time high inflation rates. Their energy costs are just through the roof, and in Europe, and we're experiencing some of that obviously here as well. And California prices are twice that of other parts of the country or the national average. So if you're in Texas, it's still higher than it was clearly like in 2020 when everything kind of like all the prices collapsed. But it's still hitting people hard, but not like it is in California. And California will typically lead the charge when it comes to an economic collapse. So Now, I think what to expect, because I've had several people say, well, what if this is the bottom for Bitcoin? Like around that, we've already hit the bottom, 17,500. And the reason why I don't think that is for multiple reasons, but basically one of the main reasons is a lot of times things will have to kind of like long tail out as people like get pressed out, pressed out, pressed out. And then even if they were trying to be a holder of last resort, but essentially there becomes a point where they can't do it anymore and they just have to sell. They're forced to sell. They don't want to sell. They'll have to sell, and then they think, okay, I'll buy this back maybe in 6 months or a year later, and they're just kind of forced out of it. So we see that in 2018. If you look at the prices, the price long-tailed for quite a while around like 6,000 to 6,500 kind of price range, and then it just fell off of a cliff. So once the volumes go down and they see weakness, a lot of these big whales, they're able to just completely just collapse the price and then buy it back at a lower price because people are forced out. It and that's part of the reason why I tell people be careful with any kind of trailing stop losses, any this kind of stuff, just because the drop can be so severe and the candle can be so quick and the wick on it can be go so far down that you can end up just kind of getting kicked out of your investment very quick, and then it could rebound very quickly from there. So that being said, I just see this as kind of a replay of 2018. We'll just kind of go sideways and sort of trade in this channel. Once there's weakness, these whales will just gang up on it and collapse it. And you'll see that with a lot of other projects as well. Some of these alt projects just kind of bleed out. The sort of, the interest around it just kind of fades. And then people look at it and it's like, the trade volumes are really low, or it just got delisted from this exchange, or it's not on very many exchanges. So everything that looked like, something, something very exciting and all that kind of stuff, the excitement wanes. People just get burned out. So we'll see that. And then also very quickly, obviously with the real estate market, people went from being all excited, kind of chasing after this stuff, to just completely, situation just totally changed. And then people are sitting there thinking that they have all this kind of equity, they feel good about themselves, and then they no longer feel good about themselves, and then people start losing their jobs, people start getting very, very worried, and it's coming for us. So again, like I've said before, this is like the 2007 for the overall economy, where stuff kind of got a little shaky. There were signs that it was like, and then when you hit 2008, eventually, more cracks start to form, and then you get an absolute collapse. And that's what next year is going to be, in my opinion. Next year, 2023, is going to be like the 2008 collapse. And I think it's going to become far, far worse than most people anticipate. And crypto is going to get dunked under as well in the short term. But I think that when crypto comes out of this bear cycle, and we do get kind of bargain basement kind of scenarios, then it is gonna come back very, very strong, and people will gravitate to that because it was the first to crash in a way, kind of ahead of real estate, ahead of the stock market, and it will be the first to rebound. So that's what I'm looking for. We definitely shouldn't turn our backs on crypto. We should still stay vigilant and everything, but we're headed for rough waters. You tell me that people in California driving around trying to pay $7 a gallon, you're telling me that they're not hurting? You buy a bag of groceries and it's $50. You're telling me that they're not hurting? They're hurting. So people get stressed out. There's just people just people are stressed. It's not going to get better. So that being said, guys, at the end of the day, keep an eye out, keep a pulse on this market. And some of the rural land things are going to kind of fade. The excitement's going to fade on some of the rural land, and you know, there could be some good pickups as prices collapse and stuff like that. People get more desperate. You're going to see some of this kind of like plots of land that's going to end up going for pretty cheap. But this, you know, it's gonna come here in the next 6 months, a year, but then especially like 2 years. If someone has undeveloped land, you know, it's just sitting there, and it ends up being kind of this tax burden for them. And when the prices just collapse, then they're just looking at this thing and they're thinking, well, this isn't doing anything for me. So we need to keep a lookout for like all these opportunities and everything, and stay vigilant. Anyway, guys, like this video, please subscribe, and follow me on all social media at Brian Phobos, YouTube, Instagram, Steam, at Twitter, Hive, everywhere. See you guys.